Good morning and welcome to our We Got This WA webinar series. My name is Sarah Childs. I am the Executive Director at the Business Health Trust and I'm just thrilled to be part of this series that is bringing technical expertise directly to our businesses and owners, operators, and organizations across the state. Today, we're going to be able to look at a really specific topic, the Shuttered Venue Grant or Shuttered Venue Operators Grant, and hopefully you will find as much information as I have going through and preparing for this that is just very valuable in getting funding to organizations. So a few logistical details before we get started. First of all, special thanks to Bank of America, that is our presenting sponsor for this series, to make this possible to attend at no cost to our members and to those all across the state. It's also sponsored by Reach King County, which focuses on retention, expansion, and collaboration for small businesses. I encourage you to check that out. It is on the Seattle Metro Chamber of website page there, and it's just a whole host of resources and support for businesses. And of course, Business Health Trust, we are very pleased to be part of this as well. So if you need help during the webinar, please use the chat function. This will let our team help troubleshoot any technical issues that you might be having during the webinar. If you have a question for our wonderful speaker, please use the Q&A button. He will be trying to answer things in relative real time, but please try and hold your questions as he goes through his materials as well, so that he can try and answer those that you might not have a question afterwards, because he has so much great information. And lastly, I wanted to just remind you that this webinar is being recorded. You will be getting a post-event email from the Seattle Metro Chamber, and there will be a link to this recording. A reminder that this recording is kind of a point in time, and what Steve will be sharing today could also be changing as we continue through the next days, weeks, and months. Lastly, I wanted to just let people know that this topic is a great one, and we also have partnered with a local accounting firm here in the region, Clark Nuber, to provide technical assistance to small businesses and organizations. So if you are needing assistance, technical assistance accessing this grant, this is a no-cost one-on-one consultation where they can take your own business information and facts and circumstances and really provide you some guidance. And Lee will be our point of contact. She just dropped in the chat her email address. So if you are interested in that assistance, please reach out to her and we will connect you with them. So with that, Steve, please join me. I'm so pleased that Steve Burke is joining us today and going to walk us through the Shuttered Venue Operator Grant, and a bunch of information to just help people access this.
Well, thank you, Sarah. This is it's good to be with everybody today. I hope that that you feel that you get at least something out of it. I've got to share with you a little bit of the role that I've been playing. As you may know, I've probably met many of you before that are already on in the various webinars that we've been doing. I'm with the Washington Small Business Development Centers. We are a state-federal partnership that's been working in the state for 41 years. We have a pretty large footprint, 25 locations with 34 certified business advisors around the state. Somehow or other, I've wound up with the role of being involved in a lot of the pandemic relief program webinars, both at the federal and at the state level. And I think primarily because I have had the time to be able to study a lot of this material when other people may not, in terms of running your businesses, may not have had the same time to do that. I do have to apologize that my colleague in many of these is Janie Sacco of the SBA is not able to be with us today. The SBA has actually been very clearly told that they cannot participate directly in providing advice and assistance relative to the Shuttered Venue Operators Grant or the upcoming restaurant revitalization fund, because of a potential sort of essentially conflict of interest, I suppose, because both the SVOG and the RRF are first come, first served programs, and they don't want to give unfair advantage to people relative to that. The SBDC doesn't fit under that real criteria, so we're able to give you this information and present it to you as best we can. There really isn't a lot of update for you, since many of you may have been involved in the public SBA webinar for the SVOG that I think was on early last week on the 30th of March. So a lot of these slides here are going to go through this. As Sari had mentioned, if you could hold your questions until we get mostly through the slide presentation, unless you actually have a question that relates to the slide that I happen to be on. And I may be able to answer that question on the fly as we go through these. And I'll do my best to try and explain it from the standpoint of a person trying to apply for these SVOG grants. I also want to say that in my study of this material and the connections that I've had with the Office of Disaster Assistance of the SBA that's been managing this program, it's very clear to me that there's a lot of detail. There's a lot of steps to go through, and it's going to take, for those of you who are interested in applying for the portal that opens tomorrow, that you are going to want to have somebody dedicated to doing this and staying focused on it. My takeaway is that this is a lot like a nonprofit applying for substantial grants and jumping through a lot of hoops, oftentimes employing professional grant writers. I don't think you need to do that for this, but you've got to have somebody who understands where you are in the process, what are the things you need to have, be ready to do, how you need to be prepared, and what you need to do next. And there really should be somebody whose primary responsibility in your organization is responsible for that. I think that's probably some of the best advice that I can give you. All of the information, or for the most part of it, short maybe interpretation of some things, will be available in at the SBA website that many of you may have visited already. You'll have access to that. But at that website, there's a 28-page FAQ. There is also a separate document on eligibility criteria, and then a separate document called the preliminary application checklist. In addition, we've been told that there is going to be an applicant user guide that will be released. I'm hoping later today or tomorrow morning, that will provide you with additional specific detailed information on a step-by-step basis. So with that, I'm going to go ahead and get started. These are the things I'm going to try and cover with you today: the overview, the eligibility, the requirements that you need to, and things that you need to do to get ready. The portal, as best we know it is, we don't have any actual slides relative to the portal because we haven't actually seen the portal itself. But what are the definition of revenue was a big one for this particular program, the use of the funds, and where to look up for additional information. As you know, the program is administered by the SBA. It's actually being handled by the SBA's Office of Disaster Assistance. That's the same internal SBA organization that does the disaster relief funds, such as the EIDL, the Economic Injury Disaster Loan Program, but they also handle all other physical disasters, tornadoes, and the freezing problem down in Texas, where they had all of the freezing and the snow. So it's a very busy organization. That's one of the reasons why it's taken them so long to get this program put together. I also, tying to comments that I've already made, I want you to be aware of the fact that In the December 27th legislation, the Economic Aid Act, that actually created this particular SVOG program, the Congress specifically, and more than once, is requiring the SBA to do what they can to combat fraud. This is also the very first full grant program, certainly of this kind of dollar amount and magnitude, that the SBA has ever actually put together. That's one of the reasons why there are so many steps to it, and the being successful at this is going to take a fair amount of focus. Is that when they're giving out, maybe up to $10 million for some of the venues that they're going to apply for this, that's substantial money. And the SBA simply has to make sure that it's going to the right qualified venues and for the right reasons. So key criteria: you have to be in operation as of February 29th, 2020. It's funny how the dates are different for a lot of these programs, but that's the date for this one. And there really isn't any, that I'm aware of, any adjustment to that. The maximum award is the lesser of 10 million, or 45% of your 2019 gross earned revenue. There is a couple calculations for that I'm going to explain later. There is a $2 billion set aside of this for venues up to 50 employees. It originally was $15 billion funded, but the American Rescue Plan Act added another $1.2 billion to this. The SBA is going to review these in the order received. So I want to make this clear. Everybody can start applying tomorrow as soon as the portal opens. But it is first come, first served. So being able to get your application in, hopefully it's not overwhelmed. Hopefully we don't have a struggle with the portal tomorrow, because it hasn't otherwise been independently tested to my knowledge. But those that have the priorities, I'll explain those to you if you're not aware of them. Those that have the priorities are going to be sorted out by the SBA as the applications come in. But you can start applying tomorrow regardless of the priority, the funding priority that you wind up in. Grants are going to be awarded until the funds are obligated. One of the questions I'm constantly getting is, how long, Steve, do you think the funds are going to last? My personal opinion is probably not very long, 4 to 6 weeks, maybe 8. But it all depends on how many really jump on this and how many are willing to go through the numerous steps you've got to go through to make this happen. I did want to talk about the PPP. I've got a couple slides on this, and it's important to note the American Rescue Plan Act did change the criteria for this. There was a lot of worry about whether, in fact, initially, you could not even apply for a PPP and still be eligible for the SVOG. That's no longer the case. Now you can apply for a PPP loan, but you have to do it before you receive and complete an application for the SVOG. I've been getting a lot of questions about, do I have to deal with the fact that I have applied for a PPP but not been funded? Well, one of the things that I know is that in the SVOG application process, you are going to have to declare if you have applied for the PPP. And I'm pretty certain that you will not actually get the SVOG award until after you have been funded by the PPP and the commercial lender that you're dealing with on the Paycheck Protection Program, because mathematically they are going to subtract from your SVOG award the amount of the PPP. Somebody was asking about gross revenue, not gross earned revenue. I'm going to cover that whole revenue topic here in a few minutes. I do not know what time the portal opens, but if I were a betting guy on that, it would be somewhere around 8 or 9 o'clock, probably 9 o'clock East Coast time, because it's a national opening. which could be as early as 6 a.m. Pacific time. Supplemental funding. The legislation originally is providing for supplemental funding at 50% of the original award amount, but they are not accepting any supplemental funding applications. If you are eligible for it, they have said that they are going to put together a $0 placeholder and will only follow through on the supplemental funding. That's the 50% after your original award, if there's still funding available. And they've even mentioned in the webinars, the two that I've been on with the SBA, that they have their doubts about how long that 16.2 is going to, $16.2 billion is going to last. So as I mentioned, and I'll say this a couple times, there is, we've been told, an applicant user guide that is supposed to be coming out. I'd like to think it'll be out maybe even later today or tomorrow as people start to apply. I think it would be really helpful. I think it actually describes, how to go through the portal itself and what are the key tips regarding each one of the places where you've got to make an entry. So a key point about that PPP, you cannot apply for it after you've started the application for the SVOG. And if you do, and you don't declare or disclose what you've done in applying for the SVOG, and you get a PPP after the fact, your use of those PPP funds will be considered in violation, and it's definitely something you would not get loan forgiveness on. You can get a PPP, but once you start applying for the SVOG, my recommendation is that you would not want to do that any further. So hopefully, today's the 7th, the portal opens tomorrow. Hopefully, if you were aware that you could also get the PPP prior to the SVOG and you've already started that process, then with the SVOG, you will want to declare that you've done that, even if you don't know the amount yet. Your application with the SVOG will probably be held up until you are funded so that they can do the math. That's the way I believe it'll work. So the primary activity must meet the eligibility requirements. As you probably know, and this is also one of the single biggest questions because there was so much back and forth on this, when this thing opened up or not opened up, but when they first started announcing it, was it going to require fixed seating or not? Those that are theaters and live venue operators, performing arts operators, museums, zoos, and aquariums, there are certain ones that apply that have fixed seating, and those are certainly applied to things like theaters, entertainment centers, that actually have fixed seating. That does not mean, as we understand it now, that every venue has to have fixed seating like we once thought it did. What it does say, though, is that those that have, for which the requirements are for the particular type of venue, does not have fixed seating. It does have to have a defined performance and a defined audience space. And you will have to be uploading detailed floor plan drawings as part of the documents that are going to be necessary to demonstrate how the rules fit to your particular venue. Museum operators, if there's any of those on today, you do have to have at least one performance space in the museum to be able to qualify. Motion picture theater operators, when you do your floor plan, you are going to have to show where your projection room is and what it entails. There's an awful lot of other criteria on each of these that you're going to have to show. Each business entity owned by an eligible entity, it also meets the eligibility requirements. So there is some detail I'm going to provide for you on that. So a subsidiary definition, either wholly or majority owned and controlled by another entity. There's only one SVOG application per EIN, but a maximum of 5 entities related by affiliation, meaning that you can have one parent firm and 4 subsidiaries relative to that. And I know that there are some venues and certainly some people that I've been working with who to which this specifically applies. Eligible museums and all museums operated as subsidiaries may receive no more than 10 million combined total. Publicly traded firms and venues are not eligible for this. Those involved in a sexual nature are not. Those adult places are not eligible for this. If more than 10% of your 2019 gross revenue, and when I'm going to define revenue a little bit later, but gross revenue means from all sources. If more than 10% came from the federal government, you're not eligible. If you own a venue in more than one country or more than 10 states, or you have more than 500 employees per location, you're not eligible. Seasonal venues holding fewer than 48 events per year are not eligible. And this has come up, and I think that this has an impact on many of you. You've got to do at least 4 per month to be eligible for this SVOG. A business that does not operate primarily in the US or own a business in the US and make a significant contribution to the US economy. Wedding venues, bowling alleys, ticket resellers, sports stadiums, restaurants with live music are generally not likely to be able to apply for this, because what they are looking for on the whole, and you should know this by now, are those that are regularly venues that are open to the public, that have staff that perform such things as lighting and sound. You have to be able to demonstrate that. You sell tickets to the public, you market to the public, and actually have live performance venue type of operation. Or the one exception to that is somebody who is a specific talent representative, and there's certain criteria for that. So for everybody, you do have to get, ultimately you have to get what's called a cage code. And to do that, to get a cage code, the first thing you have to do is get a DUNS number, and then register with the SAM, which is a System for Award Management. At this link right here, I would like to think that all of you have done this and gone through it. If you haven't, at the sba.gov/SVO grant, you will be able to find videos that should help you through this. I met with somebody just yesterday who's still struggling with their cage code, but it's the cage code that you get at the completion of the SAM.gov application. And you want to be able to make sure that you get that cage code, because that's what you're going to need to start your SVOG application. All of these things here are the links that I've been referring to of various documents and the FAQs. I really recommend that if you haven't already, that you go through those, because it will answer many more questions than I'm going to be able to get to. So it starts tomorrow, and they're going to sort them into 3 phases. I think I alluded to this. So they're going to start accepting all applications tomorrow, but they are only going to complete applications of those that have demonstrated a 90% gross revenue loss in the first 14 days. And this is from April to December 2020 as compared to the same period in 2019. Unlike the second draw PPP, it is not by quarter. It is a comparison between April to December of 2019 compared to April to December of 2020. And this is based on a gross revenue. And again, I'm going to talk about gross revenue versus earned revenue in the next slide. So gross revenue is all sources, and that applies to both the first and the second phase. So the second phase, in the second 14 days, any not funded in the first 2 weeks that were eligible in the first phase, but then those with a 70% gross revenue loss as compared the same period, April to December 2019 as compared to 2020. And then the third phase is after 4 weeks. One of the slide decks that I got from the SBA, they were giving themselves some processing time and actually said that it was going to be after 30 days, which I don't know if that's true or not, but it probably depends on the circumstances at the time. But after they've gone through first phase and second phase, entities that suffered at least a minimum earned revenue. So now we've moved from gross revenue to earned revenue. And I know that this is confusing. Can't imagine why they made it that way. But the explanation that I got was that this is the way Congress actually defined these various phases, which is why in the FAQ that's dated March 22nd, there's 3 full pages on the definition of revenue. So to summarize that as best I can, gross revenue is a total of earned revenue from various sales of goods and services, admission tickets, merchandise, food, beverages, advertising sales, and contracted presentation income. And you have to use that, so that's gross earned revenue. Take that back. You've got to really clarify the difference between gross earned revenue, gross revenue, and earned revenue, because each of these 3 categories have different dollar amounts that are actually going to be included. Gross revenue is revenue in whatever form and from whatever source, including contributions, donations, and grants, with the exception of any funds that you might have received from disaster assistance. And by the way, just to make sure that you're aware, if you received a PPP and an SVO, an EIDL, EIDL, Economic Injury Disaster Loan, in 2020, those do not have any effect on your ability to get an SVOG now, or to have those amounts deducted. So when they're talking about a comparison of revenue between 2019 and 2020, gross revenue does not include what you may have received from the EIDL or the PPP. And as we said, this gross revenue is used in the first and second priority. Earned revenue is monies received from the sales of goods, services. And you do not include the other funds such as donations, sponsorship, government assistance, or return on investments. And that's the one that's used in the third phase. I believe, and I would hope, that the applicant user guide and the portal itself is going to make this point clear so that you know what those different definitions are and where and when you should be entering those, and then providing documentation to support those. So if you haven't gotten started on this already, what's the primary tip here? You want to have your financial documents separated enough or defined enough so that you can submit the verification of these 3 different categories. And so you're going to be asked for that, and you'll make your going through this application portal a whole lot easier if you do that. So the award amount is, if you're in operation on January 1st, 2019, it's 45% of the 2019 gross revenue. If you're in operation after January 1st, 2019, grants will be for the lesser of the average of monthly gross earned revenue for each full month in operation times 6, the lesser of 10 million. And the award amount will be reduced by the full amount of any PPP loan received, but only those received in 2021. As I had mentioned, applications are accepted on a first come, first served basis and reviewed based on the time of receipt. The SBA is going to determine, based on the revenue information, the priority phase the applicant will be processed in, and this is going to continue until all the funds are obligated. There has been some talk that I've been involved in with various that there still is the possibility that Congress is going to be asked to extend this program. I personally have my doubts about that. I think that there is a lot of pandemic relief fatigue. So many programs, so many applications. Some are easier, some are more difficult, like this one. And I'm going to be surprised if they extend this past the original 15 billion, and then plus in the March 11th legislation, they added another, I think 1.2. I'm going to be surprised if they're going to be willing to add more or take the time in Congress to extend this again. Not saying it couldn't happen. I'll be personally surprised. So you've got to have your background documents, your financial documents, a set of standard forms and applicant-specific documents. You've got to create an account in the application portal, and this is not an account that you use for anything else. You want to use new account information, create a new password. You're going to have to pay attention to which fields are absolutely required and be able to answer all of those, and provide the information in a non-required field if it applies to you. You have to upload all of the required applicable documents. They will accept it in PDF, JPEG, Excel, Microsoft Excel, or Microsoft Word. Application documents are saved throughout the process. Applications not received by the SBA until finally submitted. I want to say really what that means there is that, and I've read this now a couple times, once you do a final submit, they are going to review your application, and you are not going to be able to go back in unless they actually ask you, and they may, and I'm hoping that they do, but you are not going to voluntarily go back in, edit, correct, or once you have been awarded, you are not going to be able to ask for a reconsideration. They have made that point clear. Once they give you a final award, it's going to be final. And this is why my colleague Janie Sacco of the SBA is not with us today, is that they have specifically declared that the SBA staff are not permitted to provide assistance on this, so that they don't give anybody an unfair advantage on this first come, first serve program. You do have to provide a written confirmation of need. I'm going to give you an example of that. Your corporate documents that determine exactly who you are, which may include your articles of incorporation, certificate of existence, LLC agreement, operating agreement, certificate of formation, such and such. You do have to give a government issued photo ID front and back of the business owner and or primary officer of the organization with authority to complete this grant application. So that authority to be able to do that has to be certified. An employee list with job titles and employee status. And if you're a nonprofit, you're going to have to share your tax exempt documents and be able to declare who your board of directors has designated as the signatory and authorized representative of the nonprofit. You are going to have to provide a 2019 tax return, and before you are finished and before you have finished using the funds, you are going to have to file and provide the 2020 tax return. That will be mandatory. I want to make that clear. You are going to have to provide a 4506-T, which is the authorization for the SBA to obtain and verify the tax information. I know you want to ask yourself why, if you have to provide your tax returns, does the SBA also want the ability to verify those? It's another fraud prevention technique. So you're going to have to both provide it and then provide the authorization for them to get it independently. You are going to have to provide quarterly income statements for 2019 and 2020 signed by a primary officer of the organization, the payroll statements, a copy of the most recent audited financial statement or single audit. This created a lot of concern when this information first came out. If it's applicable or a link to where the document can be located within the normal course of business. So if you are one of those that has to do this on a regular basis, as many nonprofits are, then you want to be able to provide that. You have to determine whether or not there is a single audit criteria that applies to you or overall audited financial statements. Audited statements are going to be required if the business obtains more than $750,000 in federal funding in more than one fiscal year. And that's an actual primary criteria that predates this SVOG. And so they're just following up with legislation that Congress passed previous to this, so that people getting a grant have to provide audited statements if they, in a fiscal year, receive more than $750,000. I believe that's their most recent fiscal year. Additional applications, and I've never actually seen these documents, but you're going to want to be aware of them. The SF 424B, which is an assurance of a non-construction programs. This is actually found somewhere on grants.gov. Certification of a drug-free workplace. Form 1623, which is certification regarding any potential debarment, suspension, and other responsibility matters. And a 1711, which is disclosure regarding lobbying and disclosure of lobbying activities. In addition to all of those, there are specific documents that are specific to each type of venue. And you see here, you've got a movie theater, an art museum, and a live music venue. You're going to have to provide those for the first and the third picture example here. You have to provide a detailed floor plan. And in the theater, that has to include your projection area that details that process so that they have real proof that you are in fact a movie theater. I'd mentioned that you do have to provide a certificate of need. This was an example that the SBA gave us. And so it gives me some clues too. Due to the uncertainty of the current economic conditions, the SVOG that we're applying for is necessary to support the ongoing operations of, say, Downtown Music Venue, LLC. The Downtown Music Venue opened its doors on August 20th, 1992, and is currently shuttered, but intends to reopen on April 30th. So what that shares to me, the clue that I get from that is that I don't know how far back you can date your use of the SVOG award funds. It looks to me as though what they're saying here is that what they're primarily looking for are those that have been, in fact, been shuttered to a substantial amount. In the first 14 days, 90%, in the second 14 days, 70%, and that you need these funds to reopen. It doesn't really address that I've seen how you were supposed to have survived, since last March when the pandemic really came underway and most of you were required to close. So the proposed award is based on the financial information entered by the applicant, and they will calculate it. They were not going to, you don't get to apply for a certain dollar amount. And this will then appear as the proposed award, something that they're not bound to, but it's going to be based upon their initial calculation from the documents that you provide. If you don't want this entire award amount that's calculated, you can let them know. But it's going to, the final award then is going to be based upon their verification of your budget. The application is not submitted until you actually click a final submitted button. If they are going to ask for more additional information, they will notify you of that. You have to log into the system to review any change in your status and the application status prior to the award. So it's submitted. There is an on hold that's going to be potentially based upon the fact that the U.S. Treasury holds a do not pay list, which means that you've run into trouble with the IRS, the U.S. Treasury, maybe the SBA in the past, and you've been placed on a do not pay list, which means that you're going to have to address whatever reason that might be before you can complete the SVOG and receive an award. Then there is a final review, and then you are approved or declined. Federal agencies may not award grants to individuals or companies that are on that do not pay list. They're going to check that do not pay list multiple times because it's possible that you get put on it prior to the final award being given. If you do, you should be notified that you are, or may not be notified, but you have to log into the portal to see whether or not you've been placed on this list. If that's the case, then whoever placed it there and the reason for it, you have to, it's incumbent upon you as the applicant to make sure that you clear your name, and you have 30 days to be able to do that. You're going to have to upload evidence that the do not pay list hold has been cleared, and then they will independently verify that. And if you do not do it within 30 days, the application will be declined. If you've been through all this and you get the notice of award, it's going to look something like this. It's going to have all these blanks filled in, and it's going to be a fairly official thing. And then obviously you're going to have to sign the terms and the certifications related to that before you actually get to that point. You do have to provide the name and general information. Contract contains the terms and conditions of the grant, the special conditions and information, and must be signed and uploaded. The approved budget. So you do have to provide a proposed budget, which details how you plan to use the actual funds that you have indicated out of the amount that they initially proposed, even though they're not bound by it. They will ask you to utilize that amount and describe how you intend to pay for it. It's going to be finalized by the SBA eventually as an approved budget. The PPP amount is going to be deducted from that at this point. So whatever PPP you're dealing with has to be funded by the time they get to this point in your approval so that deduction can be made. Applicant is going to be required to report on expenditures according to the approved budget. And there's certain criteria on your reporting requirement for that. You have to initial the assurance and certification, provide a full signature. Any misrepresentations initialed can lead to a False Claims Act action, and you have to upload with a signed notice of award. So they actually have these risk factors, and this determines how many disbursements you get. Once they've determined that you're eligible for the award, then they are going to let you know whether or not they think that your particular type of venue, based upon your application, your type of venue and other things, they're going to determine whether or not they feel comfortable in giving you the money in one lump sum or giving it to you in 2 to 3 disbursements or 3 to 4 disbursements. So it's not that you won't get the money. They just want to know, based upon an internal sort of underwriting criteria, how your use and your record of that use needs to be documented, and the extent to which they're comfortable with the process and the way in which you went through this application program. So what this means is that if you get into the moderate or risk or high risk category, you are going to have to provide updates of your budget and its use prior to each new disbursement. So if it's the second or the third or the fourth, you're going to have to provide an updated verification of your use of the budget before you will get the next disbursement. So allowable use, payroll costs, rent, utility, the scheduled mortgage payments, but not including prepayment of principal, meaning prepayment of principal, but it could include interest and principal. But these certainly have to be dated prior to February 15th, 2020, the same with other scheduled debt. Worker protection expenditures, unlike the PPP, you can include independent contractors, but there is the $100,000 cap in annual compensation per cash compensation per contractor. Other ordinary and necessary business expenses, such as maintenance costs, administrative costs, state and local taxes and fees, your operating lease, insurance payments, advertising, production, transportation, capital expenditure, etc. You cannot use this money to purchase real estate, make payments on loans originated after February 15th, 2020, make investments or make a loan, make a contribution or other payment to or on behalf of political parties, committees, or candidates for election, or any other use that the administrator winds up determining is not valid. You'll have 1 year from the date of the award to expend the grant funds. So that's a fairly good time. They can only be used to pay allowable items of costs incurred between March 2020 and December 31st, 2021. So for supplemental grants, grantees will have 18 months from the date of its initial phase award to expend its grant funds. And if they get to the point where there is supplemental funds, those can only be used to pay allowable costs incurred between March 1st, 2020 and June 30th, 2022. Again, that's an iffy one. It's going to be dependent upon whether or not there's any allowable funds left in the appropriation from Congress. The grantee assumes responsibility for administering the grant funds efficiently and effectively, managing funds according to agreements, objectives, and terms, using accounting principles consistent with uniform guidance, cost principles. They have a whole portion on that in the FAQ that you should read, providing the adequate documentation for the cost charged to the award. Costs must be allowable, allocable, and reasonable, and done by a prudent person. And they actually have a definition of a prudent person. It's one that is generally recognized to be somebody who is honest, trustworthy, and such, and experienced. So that's why I stress the fact that you want to have somebody who meets the definition of a prudent person, who is authorized by your organization or your board to be able to complete this whole SVOG application process and be able to stay with it and stay focused on it through the end. The costs also have to be reasonable and necessary. And I know that sounds vague, but they've been through this. The Office of Disaster Assistance at the SBA has been through this for years. And they have pretty clear guidelines on these two items, what is a prudent person and what's reasonable and necessary. Grants with the multiple disbursements, meaning any disbursement actually, are going to be monitored. You do not have to submit a interim budget status. If you have a single disbursement, you're considered a very low risk type of venue, business entity, based upon the quality of your documents and such. You will have to provide, though, how you used all of the funds at the end for everybody, whether you had one disbursement, 2, 3, or 4 disbursements. This SF 425, it says quarterly in the documentation, but it's really in order to receive the subsequent disbursements that I already had mentioned. It gives a detailed budget information related to the approved budget. And you then have to provide the supporting documents that verify the expenditures, and has to accompany that SF 425, which is the document that you utilize to document your expenditures. To close out, you have to do a final SF 425, which I just mentioned. You have to report on expenditures in each budget category, provide the supporting documents, and answer any questions regarding the actual performance of the use of the funds that were part of the grant. Grantees are required to maintain the documentation demonstrating their compliance. Employment records have to be maintained for 4 years, and following the receipt of the grant, and all others for 3 years. Grants may be audited. This is a big deal, by the SBA SVOG, the SBA Office of Disaster Assistance, or the Government Accountability Office. So you got to keep that in mind. There's a high degree of audits that are likely to happen, especially if your grant award is very high. Let's see, Celeste says, so in your proposed budget, you should include the 2021 PP amount, not on the payroll line item. You're going to have to declare it in the application portal separately. The documentation might be the same that you provide, but the PPP amount that by itself is not wholly a payroll program, because 40% of a PPP can be used for other things. But you're going to have to declare the 2021 PPP amount, and they're going to ask. There's going to be a specific, did you apply? And if so, how much did you get? Or how much do you believe you're going to get, and or when that's likely to be closed, so that they can actually do the math. The only impact of the PPP on the SVOG is a reduction in the entire PPP amount from the amount that will be awarded in the SVOG. So grantees, I'd said this already on this external audit, who expend more than $750,000 in federal funds during its most recent fiscal year must get an external audit. Nonprofit entities get a single audit. For-profit entities can choose between a single audit or audited financials. And these have to be uploaded, single audits, not the audited financials, but the single audits are part of previous legislation. And there is an actual thing that I've just become aware of called the Federal Audit Clearinghouse. And regular single audits all have to be uploaded to this audit clearinghouse to demonstrate the use of federal funds. This does not apply to you if you receive less than $750,000 in federal funds during your fiscal year. In the case of fraud, waste, abuse, or noncompliance with grant conditions, the SBA can seek repayment, initiate immediate legal action to collect the funds, add individual and organization names to the do not pay list, initiate a False Claims Act action, and refer the grantee to the Inspector General. You do not want that to happen to any of you. Follow the rules, even though they are complicated and detailed. These are some places where you can find additional legislation regarding this. They've provided this information to us so that you can look these up. Another reason why I strongly recommend that if you're applying for this, there has to be somebody who has the time and the authority and the responsibility to go through this SVOG application process to be able to get these funds. This is by far the most detailed and complicated of the pandemic relief programs that we have coming up. So additional information, we've talked about, I put this in the portal early, sba.gov/SVO grant. You can get to everything from there. There are resource partners such as us at the Small Business Development Center. We may not know a lot more than what you can find online, but certainly feel free to reach out to us. I'll give you contact information at the end here. You can contact the SBA district offices, but they're only going to be able to connect you to other community resource and additional SBA programs. They cannot provide assistance on either the SVOG or the upcoming Restaurant Revitalization Fund. So make sure you have your DUNS number, you get your cage code in SAM, collect the documents on the application checklist, read the notice of funding opportunity, and sign up for updates. And I would recommend that if you haven't already signed up for updates at this svoggrantportal.sba.gov, that you do that immediately. Be pretty important, I think, to get to that point. And those would be including if they have updates as you go through the process that might warn you that you need to log back in to see what the status of your application is once you actually completed the submit. All right, so here's the last slide. As I'd mentioned, I'm part of the Washington Small Business Development Center, a federal state partnership. We are actually administered by Washington State University, and I'm a WSU employee. We do have some management oversight for metrics from the Small Business Administration. We have 25 locations currently around the state with 34 certified business advisors, a pretty large footprint. We're here to help you. We do provide direct one-on-one business advising across all elements of business that are at no cost. We are full-time year-round paid professionals that rely on both some state funding and federal funding. And you can get to us at our website at wsbdc.org. And one of the fastest ways to get connected with an advisor, if you're not already, is washington@wsbdc.org, or call us at 833-492-7232. All right, Sari, I'm going to just tackle a couple of questions that Celeste, I think I answered your question in the proposed budget on the payroll portion. So we'll dismiss that one. If you apply for the SVOG and you are denied, will you be allowed to apply for the Restaurant Revitalization Fund? I'm pretty sure that you will, although I have to be honest, we do only have a few tidbits about the Restaurant Revitalization Fund that I might be able to share with you. I will tell you that nonprofits are not going to be able to utilize the Restaurant Revitalization Fund. And you cannot apply for the SVOG. And again, this is kind of like the PPP originally was with the SVOG, but according to the rules so far, you cannot even apply for the SVOG and still be eligible for the Restaurant Revitalization Fund. So you really have to make a decision there if you think that there's a cross, and that's the rule as it stands today. But if you get denied for the SVOG, then I would think that you should be eligible for the Restaurant Revitalization Fund. That was the case with originally, and still is, that if you get denied with the SVOG, you can apply for a PPP. But let me tell you about the PPP as I understand it so far. There's only, as of last Sunday, only 68 billion left in the PPP program. And Patrick Kelly, the Associate Director of the SBA in charge of the Office of Capital Access, told Congress that as they release the hold codes on PPP, that they do not expect PPP funds that are currently appropriated to be able to last much past the end of April, despite the fact that the program is authorized through the end of May. So just to be aware of that in terms of your timing and your choices of what you want to be applying for and working with. Do not have an opening date for the Restaurant Revitalization Fund. And that's all I can tell you about that. Okay, somebody is, our company's not a venue, provide live music services for clients like. So the only way that you can be eligible for this is as a talent agency. But I've got to tell you that there's specific requirements for a talent agency that may not apply. And you can find this information at the SVOG portal, that address that we gave you. And there's a whole document just on eligibility, but talent representatives have to be not less than 70% of its operations are engaged in directly representing or managing 2 or more artists and entertainers by contract. So you have to have those contracts, and you have to be the representative for at least 2 or more artists and entertainers. And so that's a key criteria. If that applies to you, then I highly recommend that you apply for the SVOG and make it clear and have the documentation and be able to identify those contracts. Maybe if they were suspended, that's fine. I would think that that's the kind of thing that they want you to be able to, reinitiate those. But the evidence that that's who you are and the economic injury that you may have received is why you are, why this program exists. So I highly recommend that you apply. With those, I don't know if there's any other questions that any of you have. I don't have a word on when the portal is going to open tomorrow, but as I had mentioned early on, this is a nationwide program. My hunch is that it's going to open by probably right around 9 o'clock Eastern time, which would be 6 a.m. Western time. If it were me, I would be ready. If you want to be in, I'd be ready right around 6 a.m. I know that's pretty early for some people, but it's probably worth it. Maybe they will tell you that it's not available yet, but in past programs, that's what we've seen happen. So I certainly wish everybody the best, and been happy to be able to provide the information that we did today. I will wait for another couple minutes to see if there's any other additional questions. I really appreciate everybody being on today and sticking through this and getting to this point. We are happy to be able to provide this information. And again, on this last slide here, feel free to reach out to us if you'd like. With that, Sari, I'll turn it back to you.
Great. Well, thank you so much for all of this information and going through the questions that business owners and operators have. As Steve mentioned, please reach out if you have questions. The contact information is on the screen right now, and also be looking for that post-event email with a link to this material, as well as other resources that Steve has mentioned during the course of this talk. Thank you, and I hope everyone has a wonderful rest of your day. Take care.
Sari, I've got one last question here.
Okay, great.
We have P&L statements prepared for yearly 2019 and 2020. I would break it out to quarterly. It asked for quarterly. I provided that back in the slides. What my understanding is that they want to see specifically how you do quarterly. Keep in mind that the financial comparison is April through December of 2019 compared to 2020. So you definitely want to do this by quarter. I'm not going to be surprised if they have some questions about it, that some people are going to be asked to provide a monthly P&L. So
great.
Be prepared.
Thank you for answering that last question. And we will see you next time. Thanks you so
everybody.
much. Bye-bye.